Hello, Namaskar. Welcome back to my channel 𝗬𝗏 Stock Analyst, and this is 𝗬𝗏. So in today's video, I would just like to take the market review over the week. Over the last week, world market review. What has happened and what is the implications of all these corporate results which are coming. So let's start with the US market. Okay, so in USA, some of this technology and bank sectors corporate results, because this is a corporate results season is ongoing. So it has come, though it has not been very bad, but it has not been something great, or it's kind of a tepid corporate results. And the most negative or slowdown indicator which recently came yesterday only was that US retail sales declined month on month by 1.1%. It declined. US is a consumption story, right? USA is the biggest consumer society in the world, and most of this growth in USA and consumption also points to the decline or decline in consumption, retail consumption points towards a very deep economic malaise, because the purchasing power is going down, and that is why consumers are not spending, and this leads to the problems, indicates problems in the overall the job sector, corporate sector, then in technology and in retails. This is it's overall economy, and also another moot point was that data point was that the USA industrial production also month on month it declined by 0.7%. Okay, and also on a year basis, if you take the industrial production, then on like basis also it came down to very low at 1.65% from 2.5% earlier case. So overall, that is a kind of a scenario which is panning out, or this kind of corporate results and data points is pointing towards a continuing slowdown in economy, and that is what one of the moot point is that. Then another, coming back to this another market is the European market. So if you look at some of the European results which have come out in a week, last 1 week, they are really quite disappointing, because if you look at the French car company Renault, right? Renault. So that group sales fell down for fourth consecutive year. So it is continuing to show the malaise, deep malaise into this the economy, where the car sales have gone down on the fourth consecutive year basis. And also the British online retail fashion stores, that revenue fell down by 11%, even though Christmas period is supposed to be the main sales period, the biggest sell, or as everybody knows that Christmas and New Year is the biggest retail sales for most of the stores in the world, because people buy a lot of gifts and generally for New Year everything. So that is where, even though this is the biggest sales point period, that British online retail fashion revenue fell down by 11%. Another British company, bookmaker, okay, which makes shoes, very internationally famous, Dr. Martens, it also fell, and it shows that the main reason of its revenue falling sharply, despite giving a very optimistic projections by the management, was that there was a problem in the sales in the Los Angeles, in USA market basically. So it also points toward that the USA is heading towards really slow down. This consumption is getting squeezed everywhere. And now coming back to the India corporate results. So most of this, I would just like to point out one particular result which is interesting for everybody to understand, is that Tata Metallics results, which is into the pig iron and ductile iron pipes, and is basically the steel company. So the result which came out was that, even though you can say that whatever that as per the market expectations, it was quite in line with the market expectations, but if you look at this, the sales and the margins, okay, so it shows that the increase in the volumes, it sold 15% more volumes, but still its revenue was down compared to YOY. and the QOQ basis. So which shows that the price is the main thing in commodity, like in any commodity, particularly in steels and metals. So the prices are almost like 25 to 30% down on a year-on-year basis. The steel prices, that shows that, and even with the higher revenue, higher volumes, you can't make up for the loss in the prices, and that shows that decreased margin. And if you look at year-on-year basis, the profits are almost 10% of what it was, So it shows that the metals particularly will continue to struggle as long as the price remains very low, or the subdued price remains soft. So another just a very important point which I would like to now tell you is that if you look at in the recent times, the copper in last month, in 2 weeks, it has gone up by, the copper prices has gone up by 10%. So one of the reasons for this is that kind of an optimism that China has opened up. But as I told you, that China continues to struggle with its economy as well as the COVID wave. So the economy, this last quarter's growth came at 3%, which is much less than whatever the people were expecting, even though it was better than what the government had projected. But it is still much less than. And as China continues to struggle with the COVID infections and the COVID, throughout its country, even though it has opened up, and now there will be lunar holiday. This is Chinese New Lunar Year coming. So you can forget about this quarter, January to March quarter, nothing is going to happen. And that is also the reason that despite of all the optimism about China opening up, we are not going to see, before March or before next quarter, we are not going to see some of the revival of in economy in China. And that is why the commodity prices, particularly this, the steel and all these prices, will continue to remain subdued. That's what my opinion is. That, but if you look at copper prices, in that particularly there is a uptick, because the Peru, there is a, you can say the biggest protest and the violent protest against the government is happening in last 20 years. This is the biggest. So because of that unrest, Peru is the second largest producer of copper and gold. Any copper mines, you will have gold also as a byproduct. So copper and gold. And Chile is the biggest producer of copper, and Chile is the biggest mine, has given already projection that because of that maturity of their ore, that kind of they have reached that saturation of that, where you can see a decline of 6% around in the copper production. So my what I would say, that conclusion or recommendation for the near term, that you can continue to be positive or invested in gold and copper, because these two, I think they can rally a bit from here. Because gold, first of all, that US recession and high interest rate and all these things, amidst fear, that gold becomes the safe haven asset, as we know this. And with the copper and gold linked together because of this production and the data, you can look into the copper and gold as a near-term investment opportunity. And also a reminder to all of my viewers is that I am going to start a historical event series where I will discuss a historical event which has happened in the past of the economic importance, and what one can learn from that, and what are the lessons to be learned from that. So starting this Saturday, I will release this video. It will be a little lengthy video on the historical event. So you please watch that also, and please subscribe to my channel if you have not yet subscribed. And for any other information and for the lengthy and the detailed articles, you please visit my website www.saleanalyst.com, and also regarding my services, you can get all the information in that. So see you again with that historical event video. Till that time, love you and ciao from Neeraj.